Hello my fellow freedom builders and welcome back to the channel. Today's video is about Apple since they are having their earnings later tonight after the market close, and I will have a deep dive into the company, the fundamentals, the technicals, and I can't say for those of you that are in a hurry that I might find that Apple is not entirely worth the price it is now. Or maybe it is exactly worth the price right now, but there's not too much upside in it. So that is the core conclusion. I'll show you that in just a second in our value chart. But first of all, let's have a quick look at the charts here. This is a weekly chart. Apple had a fantastic run with the rest of the big tech here from exactly New Year and up to the top here, up 60%. And then they had a dive, and right now they are hovering around 175. Now they have earnings tonight, as I said. If we're looking at the earnings calendar here, I'm at Daily FX. We are looking at the after close. They are coming in here, the Q4 earnings, and they are forecasted to have an earnings per share a bit better and a revenue that is a bit lower. Now what I'm going to do today is that I am going to look at different angles here, because let me just find a quick PowerPoint slide that I often use when I teach. Because when you're analyzing a stock, there are of course the two schools that you know of. There is the fundamental analysis and the technical analysis. In the technical analysis, we're looking at charts. In the fundamental analysis, we are looking at the core fundamentals of the company. I'll get back to that in a second. But on the technicals, there is what I call predictive and reactive, meaning that you're either trying to predict what will happen next at a certain FIB level or a wave count or whatever, or you are reactive, a bit more like I am, saying I'm a trend follower. I want to see a trend and then I react to it. I don't start to predict when the trend will start. I just observe when it's there. But on the fundamental side, there is quite a lot of interesting thing to be looked at today, because there are two main schools here. There is the quantitative and the qualitative fundamental analysis. The quantitative, well, it kind of says itself. It's what you can count. That is the numbers. That is the price earning, the price to book. It's everything that can be looked at in an income statement or a balance sheet or estimates for the future. And then there is a qualitative that is more of what quality is this company? What quality is the product, the management? What about the markets they're selling to? Are there any obstacles there? And then trying to predict the future, saying, do we think that their product will have a place in the market in the future? And I can say right away, even though I don't own too many Apple things myself, I definitely think Apple will have a place in the future. The question is not so much if they'll have a place in the future. The question is, should you buy the stock? So let's have a look at that. I'll get back to this later because there are some interesting things to be looked at here. But first of all, we have the earnings. Yes, they're coming up. Looking at the MyStockScanner here under Apple, you can see that the quality score is excellent. Operating margins, return on equity, return on capital, looking fantastic. And if it was just that, you would probably buy the stock. They have so much money that they're basically a state of their own. So they're basically no risk of them going bankrupt. Analyst estimates is somewhere a buy and a strong buy, so that is all good. Now, it probably is not necessarily that good if we dive a bit deeper. First of all, we can just have a quick look at the PEG ratio. That is where you're looking at what you're paying in PE ratio compared to what the expected growth is. And that should, in my book, be around 2 to 2.5. If it's much higher than that, you're simply paying too much for future growth. And that is what we're going to have a look at today if we are actually paying too much. If we're looking first at the TPI chart, let's just have a quick look at it here. If you have seen my videos before, you know the colors. First of all, I am looking at the big longer term trend here, and if that is in green, I'm allowed to try and find a good entry on the weekly or the daily TPI up here. If we take a look at the trend, for instance, that started here, back in early 2023. We went into green. Now, for me to have an entry, I either need this one to be green and then this one to be light red, meaning it's in an oversold accumulation phase, or I need a triple green here, as we see here. So I get the first signal around here, and we could have entered around 150. We were in a very good long uptrend here. As you know, trend followers never get in at the bottom. So we get in somewhere here around the 150, and then it dived below the 50-day moving average here. And if we hadn't gone out before, we would probably have gone out somewhere around the 175-ish here. So we made $25 on a $150 trade. That is actually very decent. But right now it is in red. It is below the 50 SMA here. So right now I wouldn't buy. That is as simple as that. However, if you are a bit longer term value investor, something like that, you could consider it. And that is what we're going to have a look at now. If we're looking in here at Seeking Alpha, that is a good place to, it's not that you should definitely follow the buy and sell analysts here, the recommendations, but it's good to get an overview of what do different people think. Because when we see here, of course, it's important to look at the dates, but as you can see, here's a sell, Apple spooky quarter ahead. Then we have a sell, 28th of October. Drop Apple stock as overvaluation won't survive the above 5% on treasuries. That is something I'll get back to later today. Then there's a strong buy, and that is from the 25th. So you can see we have sell, strong buy, and that is AI and the looming refresh cycle at Apple. Okay, so that's a strong buy, interesting. Then we have a sell, Apple stock not attractive at current earning multiples. Then we have a sell, Apple, why I'm losing faith. Buy, AI could be Apple next chapter. Sell, rethinking the Apple premium, a financial reality check. Sell, Apple's overvaluation versus rising interest rates. And buy, Apple premium smartphone dominance continues. Now, there are buys and there are sells here. Which one should we listen to? Well, I shouldn't be the judge of that, but I can just get quickly back to this one and say that all the buys are in the qualitative category, or the sells are in the quantitative category. What does that mean? Well, that means that all the qualitative buy analysts, they are saying you should look at AI, you should look at Apple's refresh cycle, you should look at there is a market for this, people are buying it, people want iPads and iPhones and the new MacBooks and so on and so forth. They're looking at the chips, saying they're coming up with amazing new chips and all that stuff. And all of that is basically true. However, all the sells are saying, yeah, well, that might very well be so, but the numbers are not screaming a buy. So let's have a look at it. We'll get back into Seeking Alpha here. And if we're looking at some of these, we don't need to take them all, but we can see that the people looking at the quantitative part are basically concerned. Yeah, nice picture. They are basically concerned about the numbers. If we're looking at, I think it's the last one here, you can see that the Apple revenue in dollars, you can see that from 2009 to 2015, it went up by over 32% per year, the revenue. Then from 2015 to 2022, it went up by 7.8% per year. And then estimated now from 2022 to 25, it is estimated to go up only 3% per year. This is a slower and slower growth rate. And there are lots of reasons for that. I have been diving into that the last days. If we're looking here at Market Screener, we can see they have some estimates out in the future. And you can see that they are estimated to go down a bit here in 23. You can see the sales at $382 billion, then at 403, then 427 here. So they are growing their revenues, at least in the estimates. But if you're looking at the green numbers down here, that is what you in the square box can see as net income. You can see here $99.8 billion, 95, that is a drop. Then there's a 99.8, so we are back to square, going equal here, and then slightly up to 106. So they are not growing that fast. And if we just for starter puts that into our valuation chart here, we can try and look, I don't know, 5 years into the future here. We are comparing to a 5% risk-free rate, that is the bonds basically. And we can try and remove the analyst estimates here and just say, okay, if they can grow their earnings by, let's say, 5% per year, it actually doesn't look like they will be doing that for the next 5 earnings. This is actually only 4 earnings, so we might want to bump it up a year more here. So it's actually not looking like they will be doing much more than 5% per year, even though they're coming up with new products and stuff, because we are going into a potential recession. As some of these articles in Seeking Alpha states, there are severe problems with the sales in China. We can see decline several places in the world. And then there's another thing, because the 5% growth in earnings is one thing, but right now this green line showing that over the next 5 years it would go up 43%, which is not that amazing actually. That's roughly 8% per year, but that is at a price earning at 30.4. Now what if the price earning drops to the average for the last 3 years? And that can easily happen, as one of the articles we're talking about here, that Apple stock as overvaluation won't survive a plus 5% on treasuries. That is exactly the point here. When you are paying a price earning at 30, you are basically only getting roughly 3% on your money, because that's 100 divided by 30.4 here. What if that drops because people are saying, yeah, well, if Apple is not really growing and we can get 5 to 6% on our bonds, then why would we pay 30 in price earning? Why not pay the average for the last 3 years? Then Apple will only grow by 30.5% over the next 5 years. That's around 6% per year. Or price earning might even drop further down to 24. Then you'll be making 14% over the next 5 years. So that is less than 3% per year. You can get 5 or 6%. Let's just bump this up to 6, because that is some of the bonds right now you can get. So your money is put in an Apple stock here would grow from roughly 175 to 200 over the next 5 years. But having the money just in a bond would basically be the same as the Apple stock going to 250 instead. So just that on the growth numbers, just putting in a fair amount of growth. This is actually a bit more than the market estimates. We are more out in 3%, which means that over the next 5 years, the Apple stock will be doing 1.5%, not per year, but overall, whereas you would get 42% on a risk-free return. So just from the numbers, from the quantitative analysis, the Apple stock is a no-go. Then you can go into the qualitative part of it and saying, yes, they are coming out with a lot of new stuff. Now, I found this interesting thing here, timeline of Apple product launches. And if you're reading a lot of analysts about Apple, many of them are concerned that yes, Apple is still a great company. They're producing great products. They have a fantastic ecosystem. And in the future, probably a lot of the sales will come from many of the services, the Apple Store and so on. There is a lot higher margins on these services. So it doesn't necessarily mean too much. But let's have a look at the product line here. If some of you are as old as me, well, I can't recall this one, I must admit, but this one was a part of my childhood. I'm 50 years old, so I do remember this one. I had the Commodore myself, though. Then there was the Apple II, a fantastic innovation here with 5.25-inch discs, floppy disks here. Then we had the Apple Lisa, we had the Apple II and the Mac. Then started to come, there came some really fancy designs. I guess I thought it was ugly at the time, but today I actually think it's kind of an icon. There was the iMac, there was the iBook. Then came the iPod that revolutionized the entire music industry. Fantastic. And if that wasn't putting Apple on the map, then the iPhone did, completely crushing competitors like Nokia and stuff. So the iPhone, fantastic. MacBook, AirPod Touch, yeah, well, now we're starting to be innovative on products that already exist. Then came the iPad, which was definitely a huge thing, and they have come out with several new versions of that, but not really anything where you could say, okay, they blew our mind on that. Apple Watch, okay, that was a good one, I think. I don't have an Apple Watch, but I know a lot of people really loving him. The AirPods, yeah, well, revolutionizing without wires on, I guess. And then they start to come up with new versions, better versions of what they already have. New chips, new smarter cameras, new stuff, but not new products. This article is speculating that Apple glasses could be a thing. And I know many of you, if you are really big Apple fans, you would say, oh, they have come up with so many new small features. And yes, they have. They are still innovating, kind of. But it's not, let's just say it's been a while since we have had an iPod moment or an iPhone moment or iPad moment. So they are making their existing products better. No doubt about it. And I think some of the new features in the iPhones are amazing. But they haven't really brought a completely new innovation to the market. I know you might disagree with me, and that's okay. Then you can write in the video below. But I'm just saying that what we normally see in big companies is a startup and then an explosion. And Apple, I must admit, had been in this explosion for more years than many large companies. And then it starts to wear a bit off. Not because they're not inventing new stuff, but it's just hard for a big company to keep pumping out new stuff. This is probably the same we will see with Tesla getting market dominance, starting to get more competition. We see it in every single sector and every single large company. It's not to run any hate on either Tesla or Apple here. I'm just saying this is how it is. So the question is, should you buy Apple? Well, if you are going into the qualitative analysis and you know enough about the product and you're not just mimicking what everyone else says, but you actually know about the products, about chips, that you can see through markets. If you know enough about the legislation in China to see if Apple will be completely shut down in China. They get something like, is it 20%? I can't even recall the number of their sales in China. So if they're shut down there's a problem. Do you have a crystal ball so you can see what an upcoming recession will do to the purchase of expensive iPhones, expensive Mac computers? Well, if you can do that, and if you're really, really good at that, you might be able to get something out of the qualitative analysis. However, I'm not too good at predicting future. Not the stock market, not the weather, not anything. So I do like to see what can we actually get from the numbers that we are seeing. And to be honest, going back to my stock scanner here, what I'm seeing is not an impressive stock. You're basically paying the same price earning for this right now as you are of Microsoft, for instance, which has a lot better growth rates and several of the other big tech. And to be honest, it's not that I think Apple won't exist in 10 years, because they definitely will. They are a part of our society. Everyone knows it's one of the best known brands in the world, no doubt about it. So they will not disappear. That is not even the question of this video. The question is, should you buy the stock? And in my opinion, my humble opinion, and I could be wrong, they could invent the new AI revolution and they could 10 double and I would look like a complete arse here. But in my humble opinion, looking at the numbers, looking at the estimates, knowing what we know about the markets, and looking at the analysts that dedicate their entire life to just looking at numbers from Apple, then I think even if they pull a complete positive surprise rabbit out of the hat tonight, I actually don't think that Apple is the best play over the long term. Does it mean you shouldn't have it in your portfolio? No, that's completely up to you. I would never dare to advise you in any way or form as to your investment. So if you think this is the most secure stock to have, it's next to a security of a bond, well, then let it be in your retirement portfolio for the next 30 years and see what's happening. What I'm saying here right now, at this point, with the numbers we can see, I can see a lot of stocks that would be better investments than Apple. That is my conclusion here. As I say, you are completely, entirely right to disagree with me. That is okay. I don't want any yelling and any hate speech in here, but if you have some really good, solid arguments, then put it in the comment section below. That's all for now. Until next time, take care of yourself and your money out there, and I'll speak to you again shortly. Bye.